Welcome, good people, to the Stock Up with Larry Jones show. I'm Stocks with Josh. I'm filling in for Larry as he's attending to the loss of a loved one. Right off the bat, guys, hit a like. Subscribe to this channel if you need help trading choppy markets, but more specifically, my man, Larry Jones, is an incredible momentum trader. He's got his finger on the pulse of the market, and in recent days, he's been a little bit more cautious. I'm going to dive into the overall market, the S&P 500. I'm going to try to define the two paths that we've got ahead of us. One is back to the bull run of 2024, where we climb all the way back to all-time highs. The other one is how bad could things get in a crisis moment, either a black swan news event or the CPI, and what the Fed does is simply not what the market wants. I'm going to define exactly what the market makers want out of the Fed, and we're going to ask the question, can the Fed even deliver on that right now? We're going to dive into it. This is the Stock Up with Larry Jones show. Again, hit the like. Show some love for Larry today by dropping a heart in the comment and just sending him a little bit of love and let him know how much you appreciate him. I sure do appreciate him, and I consider it a great honor to be able to do this show on his page today. All right, let's just dive into market conditions right now. The market pulled back near 10%, largely because of the fear of war, as well as some financial matters out of Japan and the fact that the market had been lofty, but it doesn't mean that the market can't continue to climb in 2024. There has been the fear of a rising conflict between Israel and Iran, but I think that's largely been priced in, and for the most part, it's at least stabilized in the near term. The big problem that Wall Street has with stocks right now is that the Fed has backed himself in a corner. What corner is that? Well, the market wanted and priced in a Goldilocks environment for investing conditions, which basically meant that they were all in on this market as long as inflation came down and unemployment stayed down. When employment ticks up, it gives everybody the fear that the recession and the slowdown is going to be worse than expected. What they wanted was for inflation to come down and unemployment to stay down, and that would have given them a Goldilocks investment opportunity, and that has slowly faded away as the unemployment numbers have begun to recently rise. They're a big threat to us, and so those are going to be the key data points moving forward. For the longest time, it was the inflation concern because we had very low unemployment numbers, but now that they're beginning to tick up, that's going to be even a bigger indicator than the CPI moving forward. Both are very important. And I also want to quickly give a reality check to the idea that inflation is under control. You guys might have seen that trending video where a guy hits reorder on a Walmart cart that he had received in 2022. The cost of that order just a couple of years ago was around $126. He hit reorder on everything that he had ordered before at $126, and it came out to $414. And so there definitely has to be a strong reality check on the idea that inflation is technically under control. The worst condition that we could get into, and why the market is leaning a little bit bearish right now, is the idea of stagflation. That's where you get high inflation and high unemployment. It would absolutely slow the economy down, and it would cause people to go risk off. I also want to cover the VIX with you guys because we've had an interesting story there that I think everybody should look at. Now, if you don't know what the VIX is, it basically measures volatility in the market. And we had a massive spike here in the last couple of weeks of July that pushed the VIX all the way above the critical number of 60. Now, the only time that that has happened in the last decade was once during COVID in 2020 and again in the Great Recession of 2008. Now, we've had a similar fear reaction, but in recent days, that fear has significantly subsided. So basically, the market got really scared as it did when they thought that the economy was coming to a stop. It got that scared, and then just 7 days later, it completely calmed down. Now, in the other two events that freaked out the market, COVID and the Great Recession of 2008, in those two instances, it took over a year for the markets to get out of their fear position on the VIX. But this time, we were out of it in 1 week. Now, here's the concern that we should all have for that. One, the market's behaving irrationally. It dramatically sold off very, very quickly, which means there's a lot of investors controlling a ton of capital with their finger on this sell trigger, and we need to be mindful of that. Now, ultimately, this is going to lead us to two paths that I want to identify for you in the S&P 500. So I'm going to take a quick peek with you guys at the SPY chart, and I'm going to show you the two directions I think we might go. Before we do that, I want to highlight Stock Up University. Guys, this is a course on how to learn charting, how to learn option trading, how to learn momentum trading from Larry, as well as fundamentals, and he's got a full course on cryptocurrency that you don't want to miss. Now, I've seen people's courses, I've looked into different offers, and a lot of people are pushing a $3,000, $5,000, $7,000 course. Larry's offering way more in his course for a fraction of that cost. There's a ton of value there, guys. If you have thought about joining the Stock Up University in the past, I want you to seriously think about feeding your future and investing in yourself. If you have not done well trading the first half of 2024, the next half of 2024 could get way crazier and way choppier, and you need to get prepared. I think you want to look at laying a foundation, and Stock Up University can help you do that. So make sure you check that out, look it over. He's got a number of videos explaining exactly what you get so you can have the right expectation for what you're investing in. Ultimately, what you're investing in is yourself. And I think that Larry's done an incredible job for helping people lay a foundation for their knowledge on investing and their knowledge on Wall Street. So make sure you check that out. Okay, where's the market going? Let's go look at the SPY, and I'm going to give you the two paths before us. I've got the SPY up on my chart with a ton of bells and whistles and various signals that I'm watching to give me an indication of what the rest of the year looks like. But I'm going to give it to you pretty simple, guys. At this moment, we're up against a descending line of resistance. We're also up against the 50 SMA. We need to break through there. And if we do, we'll see a little bit of resistance at around 552. But at that point, I could see us easily getting all the way back to all-time highs, making a potential double top. Now, that's the most optimistic view that I've got on the SPY right now. Now, from the bearish perspective, and so from a perspective of wanting to be more cautious and seeing what the market will do over the course of the next couple of days, this week that we're in, we really need to close above that white line of resistance and that 50 SMA. If we fail to do that, then I think the concern on a lot of technical analysts is that we're going to have to come back and test the 100-day SMA that's right beneath it. And then we'll make another attempt at breaking through this area of resistance and eventually breaking through the 50 SMA before we can move higher. And so I want you guys to watch carefully how this week closes, because this week not only tells us the story of what's going on in the near term, it's also going to tell us how price action is going to play out over the next 30 days and possibly to the end of this year. Now, back in June, when we neared the halfway mark to this investment year, Goldman Sachs put out a report that said largely all of the gains that they had expected for 2024 had been achieved and realized. Big tech and a lot of companies had hit their high points already, that the S&P 500 had moved up as high as it likely would move in 2024, and that there was the expectation that we would pull back as we got into July and at most move sideways till the end of this year. That we're largely not going to go into a major capitulation, but they were attempting to prepare their customers for having a lower expectation of a market continuously climbing higher and higher all the way into the end of this year. Now, in the last couple of weeks, we pulled back 10%, and in the last week, we've recovered half of that. And so I just want to keep that on the table. Best case scenario for this year from Goldman Sachs' perspective is that we would retain the majority of the gains that we've seen in some of our favorite stocks, and that we would end the year largely flat, and the market could continue to rally going into 2025. Now, I just wanted to give you guys that as a general thought of expectation. We're going to see choppiness. The whole second half of this year is likely going to produce some opportunities. Even if we were to make that full V-shaped recovery and go all the way back and make a double top at the S&P 500, we'd be back in the same boat that we're in right now, where you want to be looking at taking some profits. Who else is taking profits? Who isn't taking profits? Warren Buffett's sold half of his Apple position. Bellwether company, high performer, top market cap company in the world, one of the strongest investors in the world, sold half of his position of that company. So that's something to consider. I don't believe the markets are crashing from here. I believe, similar to what Goldman Sachs said, that we would largely move sideways until we finish the year, keeping some of our gains, not all of them. I believe that stocks that have been winning all of 2024 will continue to win. I like to highlight NVIDIA. Even if we got to pull back on NVIDIA before earnings, it's right around the corner this month, and I think that the market's going to give them the benefit of the doubt. Worst case scenario, we run up all the way to earnings, and if they disappoint, then it could pull back there. I bought up the dip when we went beneath $100, and now today we're very close to 120. So I think that the companies that had been winning are going to continue to win. It's likely going to be the same companies that work all the way to the end of this year. That wraps it up for me today. Thank you guys for joining. Thank you for supporting Larry. Let him know through the comments how much you love him. Hit the like and subscribe so you can get his next video. Peace and blessings, my friends. Take care.